Hi madam and hi everyone, my name is Vinusharan Saravanan. So today I'm going to presenting about my mini project that was given by madam, and my part is question 1. So I'm going to read out the questions. Beauty Centurion Berhad is a cosmetic company which produces and sell cream lipsticks. On average, they are able to sell 950 units of lipstick per annum at a selling price of RM200 per unit. The following data is related to the product. The first one will be variable cost per unit. Direct material is 30 ringgit, direct labor is 10 ringgit, production overhead is 15 ringgit, selling overhead is 20 ringgit, total is 75 ringgit. So annual fixed cost, production overhead is 53,200, general administration 22,050 ringgit, selling and distribution is 16,000 ringgit. So total is 91,250 ringgit. So in order to solve this problem, the first question is calculate the break-even point in units and value. Next is margin safety in units and value, and third one will be net profit earned by the company. The first question will be, in order to calculate the BEP in sales unit, we need to calculate the contribution margin per unit first of all. Contribution margin per unit, the formula will be sales price per unit minus variable cost per unit, which is RM200 minus 75 ringgit. So it is equals to 125 ringgit. So BEP in sales, which is break even point in sales in unit, the formula is fixed cost divided by contribution margin per unit, which is 91,250 ringgit divided by 125 ringgit. It's equals to 730 units. Break even point in values, the formula is break even point units times selling price equals to 730 units times 200, so equals to RM 146,000. Next will be margin safety in unit. Margin safety in unit, the formula will be actual sales minus BEP unit, which is 950 units minus 730 units is equals to 220 units. And margin safety in value, the formula will be margin safety unit times with selling price, so equals to 220 units times 200 units. The answer will be 44,000 ringgit. Next, I am going to calculate the net profit. The formula for net profit is sales minus variable cost minus fixed cost is equals to RM200 times 950 units minus 75 ringgit times 950 units and minus RM 91,250 ringgit equals to RM 190,000 minus 71,200 and minus 91,250, which is altogether equals to RM 27,500. It's their net profit. So my next question will be calculate the number of lipstick that is needed to be produced and sold by the company if its desired profit is set to be RM 135,000 for the year. Now I'm going to calculate the target sales volume. The formula for target sales volume is fixed cost plus net profit divided by contribution margin, which is equals to RM 91,250 plus RM 135,000 divided by RM 125 ringgit, which is equals to 1,810 units. My next question will be, assume that if the company increase their annual fixed cost and total variable cost by 10% and 15% respectively, and increase in sales level, it's expected to be 1,100 units. Calculate the new net profit that company will earn if these changes are made. Okay, now I'm going to calculate the new net profit. The formula for new net profit is sales minus variable cost minus fixed cost, which is RM200 times 950 unit minus 86 ringgit 0.25 times 950 unit minus 82,125. So altogether will equals to 25,937.5. So annual fixed cost based on the 10%, annual fixed cost is 91,250 times by 10% is equals to 9,125. Annual fixed cost minus annual fixed cost after discount the 10%, which is 91,250 ringgit minus by 9,125, which is equals to 82,125. So total variable cost is 15%. Variable cost times 15%, which is 75 ringgit times 0.15 is equals to 11.25. So total variable cost after 15%, which is RM 11 ringgit 25 cents plus RM 75 ringgit, altogether equals to 86 ringgit 25. Next, for my last question is already popped out, and the formula for that question is profit equals to sales minus variable cost minus fixed cost. The profit is RM 27,539 equals to selling price times 950 unit minus RM 90 times 950 unit minus 91,250 plus 4,000, which is equals to 27,539. So all together from the sum, which is 950 unit minus 85,500 minus 95,250, we have to move on to the left. Everything will be positive. So which is positive means we have to add everything. If it is equals to RM 206,289, we have to divide by 950 unit. And when we divide it, we will get RM 217.15. That will be the selling price for the answer. Thank you so much.
Hi, salam satu Malaysia, ma'am, and salam sejahtera. My name is Pavitra Laki Kunjaraman. So next I will be explain the question number 2. So which is 2A. Calculate the break-even point, units, and the value. So first of all, I want to list down the selling price per unit, 100 ringgit, and less variable cost 60 ringgit, and contribution margin is 40 ringgit. So next it will be easier to find the first break-even point of a unit. So RM 50,000 divided by RM 40, which is a contribution margin, is equal to 1,250 ringgit, 50 units. It's not ringgit, it's units. And then the second will be the break-even point value. So the first answer 1,250 units times with the 100, which is selling price per unit. So the break-even point value will be the RM 125,000. So the second will be the calculate the margin of safety in units and the value. So margin of safety value, you want to find the value is RM 50,000 500,000 ringgit minus with the 125,000. The answer will be the 375,000 ringgit. And we want to find the margin of safety per units, RM 375,000 divided by 100 ringgit. So the units will be 3,750 units. So the C question will be the determine the net profit earned by the company. Okay, so first of all, the formula will be the sales minus with BC variable cost and minus with the fixed cost equal to profit. So the sales will be the 500,000 ringgit minus with variable cost 300,000 ringgit, and the fixed cost will be the 50,000 ringgit. So the profit will be 150,000 ringgit. So the D we need to find if the direct material cost increased by 10% and the Puncak Berhad would like to maintain its annual profit. Calculate number of the unit to be sold, assuming or other information remain uncharged. So we have to put a table like sales, material cost, direct labor, variable cost, fixed overhead, net income. So the first sales for the present will be the 500,000 ringgit, the material cost will be the 200,000 ringgit, and the variable cost will be the 50,000 ringgit, and fixed overhead will be the 50,000 ringgit, and the net income will be the 150,000 ringgit. So for the proposed for the sale will be the 500,000 ringgit, and material cost will be the 220,000 ringgit, direct labor will be the 50,000, material cost, variable cost will be the 50,000, fixed overhead will be the 50,000. So the answer for the net income for proposed will be the 130,000 ringgit, and for differences is only with the direct labor, which is 20,000 only. Thank you, ma'am. The next will explain you more. Thank you.
Good day, madam. My name is Pavitra Kanavadi, and I'm going to explain about the profit. So the profits formula will be selling price times sales unit minus VC per unit times sales unit minus fixed costs, and you'll be getting a profit. So we come up with it will be bracket 5,000 minus 320,000 minus 50,000, we will be getting 130,000, following by 5,000 minus 270,000, you get 130,000. So is equals to 400,000 divided by 5,000, and the selling price will be 80, and the selling price per unit will be 80. So total sales will be RM 80 times 50,000, you will be getting RM 400,000. So that will be the total sales. And the next will be selling per unit 120. The selling per unit will be 120, whereby less variable cost is 60 and contribution cost is 60. So we need to find it out. So break even minus by even profit unit will be 60,000 divided by 60. So if we divide 60,000 divided by 60, we will be getting 1,000 units. So the next will be break minus even profit. So break minus even profit in bracket of value. So that will be 1,000 times 120. So 1,000 times 120 will be 20,000. Yes, 20,000. So that's all. Thank you.